Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. In the past week, gold bulls have been on a roll, hitting new all-time highs one after another. The main drivers behind this surge are still the fast rate cut expectations and the ongoing geopolitical uncertainty, with a big influx of funds giving a solid boost to the upward momentum. This week, traders will be keeping a close eye on the Jackson Hole Symposium and the US S&P PMI data, hoping this will act as new catalysts to confirm the recent gold rally. In today's video, I'll start by reviewing the daily chart for gold against US dollar, then dive into what I believe are the key factors driving gold's recent surge, and finally, I'll highlight some risks to keep an eye on. Let's get into it. If we check out the gold against US dollar daily chart, Friday's breakout was quite a sight. Gold shot up from the $24.80 resistance level that has been in place since July, breaking through the upper boundary of the rising wedges pattern from mid of April and pushing past the $2,500 mark. However, after gold gaining more than 2% on Friday, the pace of the rise has noticeably slowed. For gold to keep climbing, I think we'll need some stronger fundamental triggers, which I'll cover in more detail towards the end of the video. While if sellers start to take over, $24.80 and the 50-day moving average will likely provide some support. Well, in terms of what's driving the recent price action, flows are the big factor here. Last Friday, gold ETFs saw their second largest single-day inflow of the year. And once the price breached $2,500, CTAs ramped up their long positions significantly, bolstering gold prices in the short term. And from an economic perspective, cooling US PPI and CPI inflation support the expectation of a Fed rate cut in September. And additionally, strong retail sales data has eased some concerns about a potential US recession. With a non-urgent rate cut and a rising risk appetite, the dollar is under pressure, which benefits gold. While on top of that, demand for gold as a safe haven remains quite robust. Besides the ongoing Middle East conflict, the Democratic National Convention is drawing attention, especially with Harris' ambitious plan to lower American family costs and a potential $2 trillion US deficit. Well, Trump's TCJA hasn't done much to help the US fiscal situation either. So it seems like concerns about US election risks are shifting from short-term candidate uncertainties to long-term fiscal issues. In this context, the dollar's outlook isn't great, making gold a more attractive option as a stable safe haven. Meanwhile, after a 3-month pause, reports indicate that several Chinese banks have received new gold import quotas from the central bank. This could spark local demand for gold and push prices higher. So overall, gold bulls are now calling the shots. With flows pushing prices to new highs, I believe the fast rate cut expectations and geopolitical risks are still the main drivers for the bulls. Potential increases in demand also supports gold's performance. However, to keep up the buying momentum, we'll need to see some new catalysts. In the coming days, Powell's speech at the Jackson Hole Symposium on Friday night will be the key. If he emphasizes the consensus of a 25 basis point rate cut in September, we might not see much reaction across markets. But if he hints at a possible 50 basis point cut and the economic conditions in China and Europe keep improving, this could be a major boost for gold, potentially driving prices to new highs, even reaching $2,600. However, I think this scenario is a bit of a long shot. And before that, tomorrow's US S&P PMI data could also provide some clues for gold prices. I think if the data comes in weaker than expected, especially if the services data falls into the contraction zone, it could lead traders to bet on more rate cuts by the Fed this year, which would likely support gold's upward movement. So that's pretty much for this week. If you have any ideas on how Powell's speech and the US economic data might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!